We have seen over the last 18 months the steepest increase in interest rates since the end of the gold standard era. And it's profound. It does have big changes, not just in the Western world, but it has big changes in emerging economies, which are dependent on dollar financing to some extent in terms of funding the governments, in terms of funding businesses. And that does present some macroeconomic headwinds. The best businesses, of course, will continue to thrive. The medium-sized businesses will look at different options and alternatives. There's always opportunities. Markets going up and down, the economy's getting better or worse. There's always threats in the competitive landscape, whether you're a large company, a medium-sized company, or a smaller company. We see very significant changes in key industries that we're involved in, and those changes have occurred over the last 20 years or so in the 2000s and the 2010s. In the financial services sector, we've seen changes in terms of how financial businesses, small and large, interact with their customers, including mobile wallets, mobile money, mobile payments, how people aggregate and collect data, how people transact financial services with a range of different types of customers. And that's changed how profitable you can be when you address lower income groups and small businesses. And that's changed the breadth of the amount of financial services available to those groups, and that's actually very, very important. It's a very profitable business, but also has a lot of impact, a lot of beneficial impact on the broader economy. Other sectors have had similar transitions. So you look at energy sector, we have great challenges globally in terms of the carbon transition. The changes in technology in that sector are very important too. We see solar power being made available to businesses at very, very small scale. So as well as contributing towards the carbon transition, these technologies are enabling businesses in our part of the world to go off grid, disintermediate the government, disintermediate the utility sector, which has been historically very poorly performing in our part of the world. M&A happens for a range of reasons. Owning an asset doesn't have to be a tattoo for life. What we've seen over the last 15 years is a lot more institutional capital coming into South Africa, coming into Africa as a whole. This is often finite life funds. These are parties who are investing to help build these businesses, but ultimately they need to exit. They have a 10-year period, and at the end of that period, they've got to sell their companies. There's a lot of uncertainty in the broader macroeconomy in 2024, both in our markets and the markets immediately around them. And there's a lot of big changes in industry landscapes. These factors all create a lot of different opportunities, and they can also create challenges. And we're very, very focused on delivering the best outcomes for our respective clients through 2024, 2025, and looking ahead over the next 10 years.